Good morning, good morning. How's everybody doing this morning? Welcome to the Trading Syndicate. I'm JJ vwaptrader1. Good morning. Happy Wednesday. Here we are. And once again, the markets are functioning as they should. Had some more liquidation yesterday after a hell of a short squeeze. Hey, aloha, Cisco. How's it? Hey, Jiraj. Raj, Worm, how you doing? So, it's been an interesting last couple of days. We had a massive short squeeze 2 days ago, followed by a retracement, uh, which is not a strange thing to have. Hey, John. Right. So 2 days ago we closed up here. Yesterday we closed down here. So we filled a 50-point gap in one day, a supply gap. Then of course the sellers picked up and sold into it. So we got a B-shaped profile yesterday. Raj actually called it out yesterday when it was still an A period. But we still have a B-shaped profile, right? And then we have accumulation in the overnight with that B-shaped profile back into distribution. Overnight inventory, if you look at it, is short because I would say the volume point of control when it moves up, inventory will have corrected. So that's what's going on now. We have overnight inventory, which is getting long. We are inside yesterday's range, right? And we're just distributing. So you can think of it like we had to move up and then we had stale inventory from yesterday and that's being sold tonight at a profit. So that's really the path of inventory. And, it's just like anything. There's less competition around selling tonight. If it's nighttime for you, so that's a good time to get rid of inventory at a higher price. Now, this is back and forth trading, right? You had a liquidation break for the larger traders. You have a liquidation break into wholesale hands, back into retail hands for profit. Big numbers for you are 6306 quarter. So on a larger scale, for larger traders, this is a look below and fail of 6306, which means if the market cannot take out 6306 going into the end of the week and into next week, it should rotate higher. That's how these markets work. They're rotational. You'll notice that a 50-point supply gap got filled in a day. And if you look back in the chart, we have 4 gaps to the upside which still haven't filled. So, and they're not that big. They're not 50 points. They're not 50 points deep. So, it tells you that any liquidation break in this market is being bought up, which is still trend up, right? I would say that was just a liquidation break. If you look at a weekly chart, and then we're right back up. So let's see what happens. Everybody says August has to be lower. Um, I'll let the chart tell me. I'd rather let the chart tell me. So we're one time framing higher, which means every half hour bar. Oh gosh, since what time was this? Since 2 o'clock in the morning, every half hour bar has been higher. So that tells you we're trend up, but we're still inside yesterday's range because the ranges are huge. So let's see, how do we trade this now? Okay. So my original balance was 20, half to 25. Double it to 34, and now, oh, I've got to do some more zones up here because we're getting into 8 times profit. So if we stay over 52, we get into a situation where we're at 8 times cost basis. Yeah, and the singles from yesterday are almost filled, right? These are supply singles. This is like a supply gap in the middle of the day. That's what single prints are like, to the downside. When they go to the upside, it's a short position. Oh my goodness. 1, 2, 3, 4, 5, 6, 7. One more. So 8 times balance would be 88. Let's see what we do here. So for example, right, overnight inventory is starting to get long. We're looking to move that point of control higher. So if you were purely looking at this as a short sale right now, because if you're thinking look above and fail, right, and you're shorting this area, what you want to make sure is the market stays offered under 52, right? So if you are a short seller, right, and you're shorting this thing, you want to make sure that the market stays under 52 offered. So say you're short 51 and 3/4, 51 and a half, right? Where are you going to put your stop? Now, before anybody asks, why would I be shorting this here? It's because inventory is starting to get too long and this is a look above and fail, right? Pretty simple, okay? So your stop is going to be 52 half 3/4, okay? That's where your sellers are. See how your sellers are competing? They started here, they step down here, they step down here. Now, when the next 1 minute candle opens, you'll see if the next 1 minute candles opens above 52, then your short is kind of like not so good, right? If your next 1 minute candle opens and say this one can't get any further than that, and the next one opens here, and the next one opens here, that's what you want, where the tops of the candles are moving lower, right? That's the ideal scenario, right? Where would I get to put a cover? Well, I see bids at 50 and a half, 50, 50 and a half. It's not the greatest trade, but I'm shorting this just to see whether or not that seller is there. So now I know my seller is under 52, right? See how it came up to 52 and got knocked down? Right? That's what you want to see. You want to see, I'd like to see a more aggressive seller. See, now the offer is at 51/4. Now it's 51. See, that's what you want. So I've got a 53/4 bid in for one and see if I can get covered there, right? And that'll tell me if there's supply, right? So I'm covered at, why did I not get a fill at 50 3/4? Is there something wrong with order routing tonight? Okay, I got filled finally. Okay. So I'm still short one at 51 3/4. I'm going to go and put a 50/4 bid in. Let's see if I get filled at 50 1/4. It's thin, right? If I don't get filled at 50 1/4, I'll take the half offer and I am flat, right? Pro mech. The heck is that? Hey, Travis, you took them? That's good. And I was looking at bids here just above 50, and that's a test trade to see whether or not what I was thinking was right, right? So look above and fail at 52. Right? Now, why am I not looking for lower? Because I see responsive buying at 50 quarter. Now it's back offered at 50 and 3/4, where I originally shorted it. So had I not covered that trade, I'd be getting stopped out at break even, which is what's the point of doing business if you're doing business for break even? There's no point, right? There's no point to doing business if you're doing business for break even. That's why people who put their stops at break even, why are you even trading? Right? You're just paying commissions, right? Yeah, in an uptrend, Travis, you can short the backfill, right? And now you know that the bid is there, so now don't short it anymore, right? See, in the old days, what traders would do is they'd short the market down to where it wouldn't go any lower. Then they cover their short and they flip around and go long, right? Generally not at the highs. Let's see, if we take out the 50 and a quarters, if we take out 50, 63, yeah, sorry, 50, 63, 49, we'll look, I'd say maybe 48, 40, yeah, I'd say 48. It's nothing wrong with shorting the backfill, right? That's all we did. This is the move up. This is the backfill, and we shorted the backfill, right? You know, when you're at the top of the range, that is not a bad little test short to take to see. Now we know that the market's bid here, right? These are places where you'd look for bids. So I wouldn't actually buy off of these levels, but if you're shorting and the market can't get down to this level, then you can cover. If it breaks that level, then the next sort of target would be here. Does that make sense? You guys see that? Yes? No? I know. It's still early in the morning. I've been up early and I've already done a one-on-one session, so I'm a bit more caffeinated than you guys. Now we wait. Where would I buy? Uh, Maybe if we did a look below and fail of 52, like if the market comes back up over 52, but right now I don't see a buy. There's potential bids at 48, John. If I was short, that's where I would be looking to cover, right? So that first place, I saw it because these candles lining up. And then here. So really 48 and a half. And I kind of look at these candle formations where the bottoms line up. So if I was short and it broke that level, I'd stay short till that level. And if that level broke, then that level. Right? Just like a subway, right? Stop 1, stop 2, stop 3. Right? But I wouldn't be taking longs off those because it's not it's a place to cover, but I wouldn't want to go long off of it. Just like when we go long, we look for the where the sellers were before and we sell into it. Not necessarily a place that, I want to go short. See if we can creep our way back over 52. I don't like buying a market at the highs, right? So if I know that the cost basis is all the way down here, right? If I know the cost basis is all the way down here. Now you guys know what cost basis is, right? Cost basis is how much you acquired the goods for. And then this is 2 times profit, 4 times profit. Do you really want to buy a market at 8 times profit? Jiraj, you should know the answer to that question. Right? Now, if you were working for the Penguin, he'd say, "Come on, man." Yes, you only go long at the balance zone edges. For you right now, because you're learning. Because it might be overall trending back down, so the short is valid, but no long at any of those 3 levels. No, no, John. Right? The short is based on a look above and fail of 63.52. Right? That's why I took the trade. So I was short 51 and 3/4, 51 and a half on 2 contracts, which I covered when it came down to test it, right? So there's no long for me right now. And I know that there are bids at 50. So, and I was answering a question. So I missed, that was another look above and fail right here. We just did it again. Look above, fail, right? So same thing, right? If you're shorting, right? Your sellers are at 53. Now they're at 51, right? We still got to break these areas, right? We got to break these areas to get any sort of satisfaction to the lower side, right? Now, the reason why it's not breaking those areas, John, is because the sellers, right? The sellers of size look at 50 and they go, underneath 50, I see 1,000 people bidding or putting up buy orders, right? So what do? I raise price, right? Yeah, that's why we're chopping back and forth, Raj, because there is supply in the singles from yesterday, which has to be cleaned up, right? So when you first start taking the look below and fail, Jiraj, you have to take it from, remember what we said, one color to another, right? Always want to take it from the edge. The edge is where you're most likely to get the best response. Once you get good at it, then you can start improvising. But until you have the basics, don't improvise, right? You know, it's like first learn how to ride the motorcycle without crashing into a tree. Then work on motorcycle tricks like, you know, doing wheelies and things like that. But if you get on a motorcycle and you try and do a wheelie, you're going to crash it right away. So learn how to ride it without driving into the back of a car, letting it fall over at a stoplight, right? Just focus on the basics of it and you'll get it, right? You'll get it. Riding in a straight line is a great trick. That's funny. Oh, so what's going on here right now? Why is the market so slow? What's the business that's happening right now, which affects how you trade? Did I play the music from Jeopardy? Thank you, Moran and Lonigan. Distribution, right? Nice, slow, gentle distribution. No, no, I had a couple of street bikes won. No, no dirt biking for me. I always wanted one when I was a kid. My parents never let me have one. And we're waiting. This is why distribution is the hardest thing to trade because it's so slow. We're taking that product from the blue area, right? We're taking that and we're selling it up here, right? So the cost basis is here. That's why the point of control is here, right? If that's where the goods were acquired, and we're taking them and we're selling them up here for profit. Hey Doc, how you doing? And I haven't even set VWAP yet. Where is VWAP? How you doing, Doc? You at the hospital? 31 half? Thanks, Dave. We are in the singles from yesterday. That's why we're seeing some resistance. Exactly. Oh, good. You got a day off. That's great. How are you, Petra? London generally likes to correct down, mother truck. Let's see if that happens. All right, a couple of more minutes. You're getting married next week? Oh, congratulations. Cool. That's wonderful. In Vegas. That's hilarious. Gosh, I haven't been to Vegas in so long. So now inventory is starting to correct down a little bit. Let's see if it comes and settles in this area here because that's the last position. Otherwise, it'll come back down to 45 and a half. Four sets of singles below? What do you mean, Lonigan? Oh, yeah, there are. Three, anyway. From that move up. Thank you for pointing that out. I should have had them marked. So now London's going to open in a couple of seconds here. We're looking to see if London can get down underneath 63.46. Nice trade, Moran. Beautiful. 52 short, beautiful trade. Saw the seller, stepped in, and sold alongside. Out at 48? Perfect. Get in, out, and got paid. That's the way to do it. Smart. Well done. London's opening and it can't take out this low. Right? So you're getting rotation back up. So, Mother Truck, you see how London's opening? Like it opened right here. Let's see if we can get any lower now. Some pretty strong bids at 49. 49 quarter. So, the thing is, even though you expected London to come and open and go lower, it's not. What is that telling you, right? Look at the reaction when we got to 49 and a quarter. It's like price went and sat on a tack, right? It's like, when you sit on a chair that's got a nail sticking out of it, it jumped, right? It got down here, and as soon as it got down here, boom, it jumped right back to 52, right? Why did it do that? Because they just stopped selling. When they got down here, they saw that there were all these bids. They stopped selling and the price rotated back up. And the buyers will chase price higher, especially if they're trying to cover their shorts, right? Like Moran, she was short 52 and 3/4. She covered at, where did you cover? Around 48 and a half? That's a perfect tactical trade. 4 points, you do that trade 4 points on 3 to 4 or 3 to 5 E-minis. It's a beautiful trade, right? That's where you're trading for income. You're not trading for glory, right? People are like, oh, I was talking to somebody yesterday and we were talking about 4 point trades and he said, oh, that's kind of skinny. Like there's not all that there. I go, yeah, well, take 4 points and multiply it across 5 contracts, right? At $50 a point, 4 points on one contract is $200. On 5 contracts, that's $1,000. You don't need to hold trades for 20 to 30 points to make money. You can make an income, and that's what we teach you at the Trading Syndicate. Come and check us out. It's only $20 a month. We'll teach you how to make an income. So while everybody else is chasing their tail, talking about a bunch of non-relevant stuff, you make your money and you're done and you're out enjoying your day, right? That's what trading is supposed to give you, financial freedom. Trading is not meant for you to be chained to a computer for 15 hours a day, right? Making and losing money and trying to get it back and then having to go sit on Dr. Phil's couch because you need a trading psychologist because you gambled away all your money. That's not how business works, right? So if you come into our room, we'll teach you how business works so you can trade with some form of intelligence. If you understand the basic simple mechanics of a market, you're less likely to make bad decisions, right? Teach you how to have good business habits, and a little bit of discipline, and you're on your way. It's not easy by any means, but if you can follow simple directions, right, you got a shot. All you got to do is be able to concentrate and follow directions, right? And once, I know retail traders have millions of different ways of doing things, but on the institutional side, there's only one way to do business. And that's the way I teach you guys. So you're always in line with the business. And when you get stopped out, you're either early or you're not in line with the business. And your stops tell you, right? So we got sellers at 52. They stopped selling at 49 and a quarter. So we're just going back and forth now, but we're still distributing. Yeah, if you're tired of just continuously losing money and blowing up evaluation accounts, come give us a try. And I'm going to be having my next coaching class will start in September. Anyone who's interested, send me a message. So that point of control is 1,410 contracts. Let's see if we can, well, we're still quite a ways away. Still need to print another 1,000 up here at one of these ticks. So distribution is one of the hardest things to trade because it's so choppy. Hey, Howard, nice short. Short at 51, out at 48. 3 points. It's perfect, right? You know, another thing is people are going, well, a 3-point trade's not that great. Well, look at the range. Look at the range over the last hour. So if you have like a 5-point range, a 3-point trade is not bad in a 5-point range, right? Well done, Howard. Good stuff. Keep it up. So, for those of you who are searching for a trade right now, don't. Just relax, right? When the market does things like this, when you see candle patterns, right? When you see candles that look like this, right? Like a barcode, right? Those are very hard to trade. So you should, that's for wholesale. That's not for retail. Those are wholesale business conditions. Doesn't really work for us. So when you see stuff like that, you can automatically just kind of relax. And when you relax, it's a lot easier for you to absorb information. I hope that helps. When you're relaxed, you absorb information much better. You're not chasing. Any questions? No? Everyone's just kind of tired midweek. I got a question. When does Nvidia have earnings? Anyone know? 2 weeks? Wow. Okay. Got some more waiting to do. Watch the overnight high. There's a good likelihood we go take it out. Okay. That's a poor high. Competitive selling. Let's see. Double top. Another poor high. We need one more tick to make it a normal high. There we go. So we're running out of supply. We're going higher to get it. Now, let's see if this actually holds or retraces. First target up is 56.5. I'm not long. If you were looking for a long now, right? Say you're a breakout trader, right? And you like to buy breakouts. Where would you put if you were to go and buy this now, right? Where would your stop be? Your stop would be under 52, right here, right? If you're a big spender, your stop will be 50, right? So if you're a breakout trader, right, now this is not a very powerful breakout. It could turn into one if if enough people come in, but it's sort of creeping higher. So if you're long, if it breaks 52, then you know you're in trouble. And then your ultimate out is going to be the bottom of those candles right there, right? And where would your target be? It would be 56 and a half. So if you say you're long 53 and a half, 53, there, you see? There, you'd sell into this, right? You'd sell into this, take your money. There you go. Nice. Yeah, we did. But it doesn't count until it's in the daytime. So if we fill these singles and then go all the way back down, AZS, they're still unfilled. If we open above them in RTH, then they're filled. That's not my rule. That's the market profile guys. That's their rule. See if we get any continuation over 56. The POC from yesterday, brother, is down at 63.25. I don't know what you're looking at, but you might want to check your settings. Yesterday's point of control is down here at 63.25. The time point of control is up here at 32. It's pretty thin up here in the 65s. So there's no point of control. There's the open, but no point of control up there. think it'll be interesting if we just go back and forth. If you look at, say, uh, Monday's high and low, we might just go back and forth in Monday's range. No, we need 1,400 contracts, Howard. And it's all, there's no four digits here yet. They're all triple digits. So the POC hasn't had a chance to move up yet because there's literally too much buying. It doesn't get to sit in one place long enough to move the POC. It's a good observation, Howard. So where's our high? 58? Our level is 59. So don't be surprised if we just kind of go back and forth in this area for the next couple of days. See what happens. And now we're going to backfill this move. So we went up to create demand, up to 58. I'm not short, but if you are short, your stop's 58, and you're looking for a fill at 54 half, 54, that's where you're looking for here. So if you're short somewhere in here, this is where your stop is. Yeah, filling out that gap, right? Spend some time going back and forth in there while the market waits for more information. And if you are short, you want to use, right? Now you've got sellers here and now here. And as long as the sellers keep moving lower, right? Say you're short 56 and a half, 57, right? Against 58. Looking to cover in the 54s. There's 54 half, there's quarter. I'd take it back, right? There's going to be a little responsive buying where L period took the K high, right? There should be shorts trapped under their bid to cover. There it is. See? Right? If you rewind this, you'll see I told you I'd cover at quarter. That's why I'd cover at quarter. Did you guys see that? Right. Replay it. I said, if you're short up here, you're looking for bids here, and where did the market come? It went right there and then started to lift, right? Because the shorts are trapped under here and their buy orders are here, right? So that's a natural place for you to cover. Now, if those shorts who are bid at 53 half, 53 quarter, if they see a large seller or a desperate seller, right, they'll drop their bids into the 52s and the 51s. But for a quick scalp from 56 half down to 54, 53 half, it's a quick couple of points here, a couple of points there. It adds up. See, now the shorts, who are the only buyers, are starting to see sellers. And when they start to see sellers, they're going to drop their bid prices to take advantage. If the market runs out of supply, they'll move their bids up. You'll see the offer, that red line, you'll start it to move high, you'll see it move higher in response to that. There you go. And this is how you trade with tactical intelligence, right? You're not wishing and hoping and praying, right? You see the bids coming in, you see the offer lifting. Now, you know there's sellers here, right? The top of those three candles, look. So say you're short and you don't want to cover, right? You think it's going to go lower. Well, if you're short, that's your warning level. If the market offers above 55, then you know you're in trouble, right? So you can always trade with some form of intelligence. You're not blind in this method that I teach, right? You know if that seller goes away, why would you still be short? Because it's going to rotate back up to 56, half. Anyway, that's how you short with intelligence instead of just closing your eyes and shorting. Any questions? Hey, Trade Maker. Good to have you back. It's okay, AZS. It's still early. Wait for your setup. If your setup's not there, no need to trade. Go back to sleep. All right, folks. That's pretty much it for me today. I'm going to leave you a little early. I gotta go get on the phone and wait in line to talk to. Yeah. Get some coffee, chill out, relax. We will see you in RTH. Thanks for being with me, folks. Really appreciate it. Come visit us at the Trading Syndicate. And if you are interested in one-on-one coaching, I'd be happy to do a session with you and show you what it's like. Give me a call. We'll do a phone call. You can just message me at vwaptrader1 on X. That's me. And stay out of trouble, folks. Trade smart out there, okay? And we'll see you at 9 o'clock Eastern Time. Thank you so much. Bye for now.